Hey everyone, Top Trader Michael here. Right now I'm talking about how VCX, Fundrise's newest innovation fund, just launched and it's trading well above its net asset value. It's very interesting because right now its net asset value is right around $20 when the fund launched. And now it trades for $315 a share. And here's the problem with that. While on the surface it seems like you're buying private companies like Anthropic, Databricks, and OpenAI, and you're paying for that access, about 50% of the fund is focused on three main companies, the three that I just mentioned. And that's a concerning because the AI sentiment is so hyped up right now, and there's so much optimism and essentially euphoria built around these companies that if any touch of reality starts to come into play, these companies will drop. So, based off the current amount of equity in the companies that you're buying, based off these current levels of 315, it would make Anthropic, Databricks, well, actually not Databricks, Anthropic, OpenAI, and SpaceX, based off their relative valuations, if you interpolate the current holding percentage and the amount of the company that the fund actually owns to get that percentage, based off their most recent market cap weighting, which is what the professionals are willing to pay, and the private equity has actually gone in and valued these companies at specifically, even knowing the potential upside, but also calculating in the risks, you would create the most valuable companies in the world today. In other words, OpenAI would be the most valuable company in the world if, in fact, the net asset value of this fund was $311. The net asset value, as reported and required to be reported by Fundrise, is sitting around $20 a share. This is concerning because people are paying for access, not value. The real thing here is that there is very little liquidity. The number of volume of shares trading on VCX right here is about across the entire day, it's about 500,000 shares, which is very small compared to some of the larger ETFs and the publicly traded companies. So it's not worth, the long story short is that it's not worth this asset value premium, because if some of these companies go IPO, they would need to be breaking records and then some just to justify cashing in at the price that you're paying right here. And that doesn't factor in any of the potential upside that they might have. So it's hype driven demand. There's a high concentration on one theme of just AI, and you're getting a fund that's priced on future dreams and not really the present value. So VCX, I think, is a great concept. I really like it, but right now it's trading more like a collectible and less like an investment. And history shows when you pay the 15 times intrinsic value, you're not the one making money. Access to great companies doesn't matter if you massively overpay to get them. This is just one of my thoughts, but I hope that you guys can share what you're thinking and let me know what you're doing with this trade and any other things that you're watching in the market.